So, surprise, surprise, MSCI is not kicking out MSTR from its indexes. It said we need to review whether these Bitcoin-heavy balance sheet companies make any sense to have in our portfolios. And what did they decide? They decided we need this. And this is really, the main thing that's happened here is not what everyone's going to jump up and down about. Everyone's going to jump up and down about the fact that MSCI is still holding MSTR, and that's good for MSTR, and this, that, and the other. That's not really the signal here. The signal here is much deeper, and that's kind of what I want to talk about. I want to look past this. I kind of said that this fear mongering is kind of felt like short cover liquidity generation to me, but the actual ruling is quite interesting. So that's what I want to talk about. This is nothing. I kind of knew that there was going to be no issues with holding MSTR in the index, but what you've got here, is a $40 billion institution that influences $15 trillion of capital, telling you and telling the rest of the market that Bitcoin exposure and Bitcoin volatility is okay in standard diversified equity portfolios. That's the key here. That's what, this is the other Rubicon that MSTR has just crossed for itself and for all of the Bitcoin treasury companies that will follow. They have stated that they may have different weighting rules and all this other stuff, but really the issue was in a balanced index of equities, operating businesses, should Bitcoin be allowed? That was the question that they wanted to ask, and that was the question that they've basically come back and said, yeah, we kind of need this, right? Now, how that happened, we kind of need this, it's totally up to, the coincidences behind the scenes in the market. But the reality is that the signal here that's being sent to other indexes is quite important, right? So they've basically said that Bitcoin volatility is good, and Bitcoin volatility, the fact that MSTR has a $500 million software business is fine. Bitcoin volatility is good. Bitcoin exposure is not indicative of expulsion from a standard balanced equity portfolio. And this is very, very positive for Bitcoin. It's very, very positive obviously for MSTR. This is not a big index, right? I want to make that clear. I mean, to put it into perspective, they influence $15 trillion of capital. BlackRock itself influences $150 to $200 trillion worth of capital to the downside, right? But what this does do from an indexing point of view is it lowers compliance risk, it lowers career risk, and all that's happening right now is Bitcoin is being de-risked. As all the bears are dancing around, Bitcoin just keeps getting de-risked. And this precedent that's been set by this MSCI review is huge, because what it means is you can have the majority of your balance sheet in Bitcoin and you're still index eligible. That's massive. If you don't understand how massive that is, because now what do you have? You have Bitcoin that can be injected into people's portfolios with no understanding about Bitcoin, no permission to invest in Bitcoin, and no need to even think about what Bitcoin is. Because if the MSCI index is doing really well and you want your manager to allocate to it, you're going to allocate to it, and Bitcoin's going to give you the return without even knowing what Bitcoin is. And that was really the key underlying thing here. MSCI saying, well, is this a valid way to generate returns? And the message is yes, this is a valid way to generate returns. And of course, it was very predictable. If you watched my video on it, it was basically like, this is, firstly, do we want an index with 80 out of 200, for example, companies just being Bitcoin holding companies with nothing else going on? No, of course we don't want that, right? Because you can just hold IBIT if you just want pure Bitcoin exposure. But to have a business that actually can have Bitcoin on the balance sheet in a significant way and not get removed from indexes like this now encourages other businesses to say, okay, maybe we do put some Bitcoin on our balance sheet because our index inclusion is not going to be at risk. So there's a lot of precedence that has been set that has been set here. It's quite important to do this. It means that, you know, anyone who's tracking the MSCI index, it basically has to hold MSTR, whether they like Bitcoin or not. It makes Bitcoin inclusion in your portfolio completely, you know, there's nothing to think about. If you follow this index and you track this index, you are going to have Bitcoin exposure because MSCI has decided that Bitcoin volatility and Bitcoin exposure is a good and valid thing for a balanced equity portfolio, right? It's massive. It's massive because this is how this thing starts. The next dominoes that will fall is the S&P 500. Of course, the NASDAQ already kind of fell, and that was kind of easier because it already looks at like tech stocks, right? And MSTR is looked at as a tech stock. And of course, they have a heavy Bitcoin thing, which is looked at as a tech thing. So that was kind of easier. But MSCI is you know, these guys build balanced traditional equity portfolios, right? For them to say, yeah, you can have a ton of Bitcoin volatility and Bitcoin exposure, and it can completely outweigh your underlying business and still be included at the same rules and the same weighting so far, means that you have just completely de-risked Bitcoin and specifically, you know, MSTR and all the other Bitcoin treasury companies from index inclusion. And that's awesome because you lock in passive flows. Now people that invest in these indexes or track these indexes, they don't care what it is. All they're waiting for is for MSCI to say, good, do it. That's it, right? That's how most capital works. There's so many rules and things like that. Most people just want someone else to blame. And MSCI has basically said, yep, we agree with this. And so now if it doesn't work out, you can blame MSCI and you're not gonna lose your job. So that's what's going on here. At the end of the day, you know, if you're an investor and you're looking at this, none of this actually matters. This actually is much more for passive flows. I'm breaking this down to you as a Bitcoin holder because you got to sit there and you got to, you know, look at it and go, is Bitcoin being de-risked right now? And every single thing that's happened in the last year has further de-risked Bitcoin, right? So, and now you've got a $40 billion index, which is influencing $15 trillion of capital, has basically said, yeah, we like Bitcoin exposure. We like Bitcoin volatility, right? So, and by the way, they didn't actually endorse Bitcoin here, right? They didn't come out and say, MSCI likes Bitcoin. That's not, it's actually even better than that. What they said is, you don't have a choice. You better like Bitcoin because it's in the index. And if you're tracking, if the $15 trillion is tracking the index, you have to like Bitcoin. Because ultimately, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.